How are you?
Well, good afternoon, everybody, and welcome to the session to discuss stakeholder capitalism. Now, some of you may know that last summer, the Business Roundtable did the equivalent of a religious conversion. They suddenly, out of the blue, seemingly, announced that they had discovered stakeholder capitalism. And after several decades of essentially working on a shareholder vision, very much driven by Milton Friedman, they said, or rather they appealed to their member companies, to uphold stakeholder values. Now, sitting in Switzerland, particularly at the World Economic Forum, you might feel like saying, well, get with the times. Because Klaus Schwab at the WEF very much developed a stakeholder mandate when he first created the WEF. And I think for many people in Europe, much of what the Business Roundtable has signed up to looks, frankly, pretty commonplace. But there is a very interesting change going on afoot right now in terms of how investors and the C-suite look at companies and look at their responsibilities and look at capitalism. And many of you will have seen that the ESG sector, environmental social governance, is exploding in size, and interest in it is exploding as well. We at the Financial Times rebranded ourselves recently under something called the New Agenda, which is very much about trying to champion stakeholder values. And I launched a platform newsletter 6 months ago called Moral Money, which looks particularly at ESG issues. So it's an interesting time of change, and we have a fantastic panel of people to talk to us today about how and why this is developing and what it means in practical terms for investors and companies. At my far left, your right, we have Katharina Pistor, who is Professor of Comparative Law at Columbia Law School in the USA, who is going to be telling us how to understand what the BRT did, what it means in terms of corporate governance and where it's heading from a historical perspective. Next to her, we have Brian Duperreault, who is President and Chief Executive Officer of AIG, the mighty insurance giant. And on my immediate left, your right, is Hiromichi Mizuno, who is the Chief Investment Officer of the Government Pension Investment Fund in Japan, which is the world's largest asset manager. Asset owner, not manager, asset owner. Sorry, you give the money to other asset managers to manage, which means they all love you and want to come and talk to you all the time. I'm sure there are some in the audience. You know, you have, whenever you go, Hiro, you have a little trail of people following you, trying to pitch you business. Very sadly, Isabel Kocher couldn't be here today because she's not well. So we have the three experts here to talk about this. So I'd like to start perhaps with you, Katharina, since you are not in the business of pitching anything, managing money, trying to talk to investors about what's going on. How do you look at the current shift in the zeitgeist? Is it just a short-term bit of fashion, or are we actually seeing a fundamental reassessment of what capitalism and what the role of a company really is?
Well, thanks for the question. It's great to be here. Let me just first say a word about the Business Roundtable pronunciation that came out. My first reaction to that was, who are you to make that decision, right? I mean, the CEOs are the agents, not the principals. They shouldn't be able to pick their principals. Today it's shareholder value, tomorrow it's some stakeholder, it could be the environment, it could be the workers, it could be something else. So that sort of didn't make that much sense to me, and also questions a little bit their sincerity. But the more fundamental point I would like to make is that our system of capitalism is really hardwired in a fundamental way, and that isn't being rewired yet. And I think there are also a lot of voices that say we shouldn't rewire it, right? So if we just keep everything as is, but now we have some additional goals, and we do soft law, or we do guidelines, or we do conduct things. But when you look at the hardwiring of the system, it's really the law, right, that hardwires the system. A corporation can be written in hard law in different ways, but it has been written in a particular way, especially in the US and in the UK, which had become the dominant model for the rest of the world. And that basically means that shareholder value does trump in the end, right? And it always comes out critically at the life and death decisions of a corporation. It's a question of mergers and acquisitions and takeovers. What matters there? It's shareholder value, right? The question is, when you think about people arguing that we should sort of somehow fold ESG into the brand name, and then we can boost value and maybe make even money on this whole thing. But when you think what happens with brand names in bankruptcy, which is another life and death situation, then things look a little bit different. So I'm looking at the capitalist system from the bottom up, from the legal structure, from the rights that are being allocated to different constituencies. And I don't see a sea change there at all. I don't even see a strong constituency that is calling for massive legal change.
And yet people like Marty Lipton, who's been crusading on stakeholder capitalism for many decades, would argue that actually within the current structures of law, there's plenty that that the C-suite can do to uphold stakeholder value. And also, if they are taking a long-term, and I'm going to come and talk to you about this in a minute, Ms. Norsan, if they're taking a long-term vision, they have to look at these externalities that they used to ignore, like the environment or the state of their employees.
Well, in theory, yes, but this is why I was pointing out the life and death decisions, right? So there are certain ex-ante implications of how you behave when you know in the end if there's a hostile takeover or if I'm negotiating a merger. At that point, it really matters only what the shareholder value delivers.
Right. So, Brian, you were one of the signatories to the Business Roundtable statement, weren't you?
Actually, I wasn't, but that's okay.
All right, okay. Would you have signed if you had a chance?
I guess I would have. I didn't, this is the theoretical question. So the question is, do I support it, right?
Yes.
Whether you sign it or not, do you support it? And, frankly, I really don't see that they're contradictory, frankly. This stakeholder versus shareholder thing. I mean, you mentioned long-term. My job as a CEO is the creation of long-term sustainable shareholder value, okay? If that's your job, okay, then yes, your owners are the shareholders, but in order to provide them with this value, you have to look at all your constituencies, all your stakeholders. I mean, for instance, you cannot abuse your workforce for any length of time and expect that you're going to be competitive. People walk, they'll go to another company that is. You can't abuse your buyers, your customers. You can't think of them on a short-term basis. You have to think of them long-term. You're in a community. You're in a place. You have to think about the place you're in and your responsibility within the community. So, to me, I've never felt that was an issue. That I was, that if I'm creating long-term shareholder value, that's what I'm doing. And yes, there is law, and I can't argue with the lawyer on that. But I think for our responsibility as minimum is, adhering to the law. But the market forces make you do more than that, and your responsibility is to do some higher calling than just the minimum that the law requires.
But do you think that what investors and your customers and even your employees ask of you now is changing from where it was 5 years ago or 10 years ago?
Well, is it changing? I think there's emphasis, but your shareholders are always looking for you to do both the short and the long. They're always looking for you to do both. You have to do quarterly earnings. You have to represent what's going on, and so that short-term demand is important, and I think it's useful because you do have to show progress and results, but you have to provide long-term efforts as well, or you have your job for that short period of time, because if you didn't reinvest or you abused other stakeholders in the process, you'll run out of ability to create that long-term value. In fact, it starts to become negative. And so we always have to wrestle with the long and the short. That's true today. It was true 25 years ago when I started running a publicly traded company. So I don't, yes, there's an emphasis, there's certainly a question around sustainability and issues like that, but this fundamental issue is, I think, immutable. It's what it is.
I must say it's fascinating because when the Business Roundtable statement came out, we actually spoke to a number of the CEOs and asked them, why they'd done it and what they plan to do about it. And about a third of them seemed to say, well, we've always done this and nothing has changed. Another third said, yes, everything's changing. And I must admit, the other third, I'm not sure they actually read the details of the statement, to be honest. So it was a very mixed bag. But Hiro, Do you think that most of the CEOs of the companies that you look at from an investment perspective, I mean, you don't invest, you hand your money to others to invest, are actually upholding stakeholder values? Or do you think that actually it's time for a change in terms of how we evaluate as investors what companies do?
Well, thank you. It's been a very interesting, the topic for me from the day one of my job at the GPIF. We are managing the public pension reserve fund for the benefit of the future generation. So we have 20, 30, sometimes 100 years time frame in mind. And as you just mentioned, I mean, you have the time frame like 20, 30 years. Company wouldn't survive if they don't take care of the other stakeholders. And you probably know that the Japanese corporate has been under criticism for the last almost like 20 years, not paying enough attention or not putting shareholder first. So the Japanese corporate used to say, the customer first, employees the second, shareholder the third. That's exactly what the Jack Ma is saying these days, and we have been criticized for that. And but recently, all of a sudden, the U.S. in particular started talking about shareholders' capitalism, which is really interesting. And I spoke with the founder of Evernote, forgot his name, but he had a vision to make his company 100-year the company. And he did his own research of the how many the company exists in the world which lived more than 100 years. And he said something like 2,000 or 3,000. And surprisingly, 80% of them are Japanese corporates. So it tells something. So if you really wanted to make the business sustainable, of course you just cannot serve to one stakeholder.
Correct.
And but when the Business Roundtable statement came out, my industry or my community, asset owner community, made a response which was not exactly what I would have done. The one is they are very, very upset by the statement that the shareholders now merely a provider of capital. And then they got really upset because we are going to be the major stakeholder anyway. And it just let them feel like now, the corporate is going to use it, the multi-stakeholder or multi-constituency as excuse not to, the focus on the what they have, they are mandated for. So they responded quite critically. But on the other hand, I have been saying to our asset managers and my own team, how could the company could survive? And if the shareholders continue to claim we are the only stakeholder, don't pay any attention to the other stakeholder, I think the shareholder will become antisocial soon.
Right.
Right? And then, but on the other hand, I was very surprised that I'm a member of Global Future Council of World Economic Forum. So the last time in Dubai, all of a sudden, the major panel is about the stakeholder capitalism, and which we've claimed that has been supporting for the last 30 years, which I never heard, but this all of a sudden become a big topic. And
Well, success has many fathers.
Yeah, right. So, but anyway, those panel didn't have shareholders in the panel talking about the stakeholder capitalism. So I can really sympathize. Now the shareholders feel like we are going to be left behind. So
Right.
it's all about to make the company sustainable, or for the other shareholders or investors to make a sustainable appreciation of their capital. I have no question or no doubt that the corporate executive have paid attention to the other stakeholders. So to me, it was no surprise. It only surprised me because I always thought in the US, it's almost politically incorrect to say, we have other, stakeholders. So this statement to me sounded like breaking the political correctness, maybe breaking some legal definition. But so for that reason, it's quite, quite impressive in a way.
Right.
But
in practical terms, of course, one of the things that's driving this is the rise of ESG investment funds and ESG interests. I mean, there's supposedly now $30 trillion worth of money in the world that's being invested according to some sustainable lens, although that number can be questioned. I mean, Brian, somebody like you, do you feel under growing pressure to show investors that you're being sustainable?
Well, there is definitely shareholder movements around sustainability. We get a number of shareholders who will come to us and want to talk to us about it. You know, our journey is an interesting journey. When I showed up at the company on sustainability, when I showed up at the company 2.5 years ago now, we had other issues. You know, we were sort of in a death spiral, and we had to come out of that. And so there was a lot of, you know, let's stop this thing from collapsing. And so it wasn't number one on my agenda list to do sustainability, I must say. But the company had a long history of being involved in sustainability. We have billions in alternate kinds of energy, et cetera. But anyway, it turned out that there was a group in my company, employees, who decided on their own, almost clandestine, but on their own, to start developing sustainability strategies and approaches. And it came to my attention, and they came in, I met them, and there was a large group of them, and they were all over the world.
The guerrilla sustainability activists inside AIG.
And they were the internal sustainability activists, and it was wonderful to see that. So the pressure was coming from our own employees to provide that. So I'm not stupid. I endorsed it, right? Because you have these very energetic people who are on fire and doing really good work. So anyway, make a long story short, we've been developing our strategies around that. The leader of that group I appointed as the sustainability officer, and the investors who've come in, they're very happy about this process because it's real. It's not for PR purposes. This has been a grassroots development in our company. So yes, the shareholders are there. No, the stakeholder, the employees are there. And so once again, you've got to think about all of the people you have to deal with and the stakeholders and where they are in this.
But what does that mean in practical terms? Because one of the issues, it's very hard to measure whether a company is being sustainable or not, and I want to ask Catherine about that in a minute. But for a group like AIG, does being sustainable mean that you don't lend to coal companies anymore? Sorry, don't insure coal companies anymore, or don't invest in them?
I thought you'd ask that question. Well, I think this is there could be a simplistic approach to this thing. Maybe I'll take a different tact on this. The environment issues today are all around global warming, okay? We as an insurance industry have faced other environmental issues in the past. Pollution. 20, 30, 40 years ago, particularly in the United States, the world woke up to the environmental impact of the way we were dealing with the environment. And as a result, enormous lawsuits and exposures were created where our insurance policies, in effect, were rewritten for us, that we were covering environmental risks we didn't realize. And so we changed our approach to that. I would say the world's better off. We suffered greatly because we had to deal with a lot of liabilities we didn't realize we had as an industry. And so you have another environmental issue, which is this one. And I think there will be certainly questions around who's at fault, who's going to pay, who's going to clean it up, that kind of thing, which is on the horizon. And we as risk takers have to think about that. So we realize that transition is required here. You have to go from fossil fuel to something else. The world is demanding fossil fuel. There's coal being taken out of the ground because people need it. Okay, so you got to recognize that you can't just cold turkey it now, but you've got to find ways to transition. So my position is we as risk takers should go to those who are showing interest in this thing and positive approaches to it. They're looking to transition their companies away from it, whether they're the ones who produce it or the ones that use it.
Right.
We need to be part of the solution here. And I think just a simplistic no is too imprecise and impractical. and it doesn't get the job done that we need to get done as,
Well, you touched on
as
a great,
a world.
you touched on a great point there, because I mean, I must say, one of the big themes now is that we used to divide the world into green and brown buckets. Now it's more about olive, in that there's a spectrum from brown towards greener, and people are trying to push companies along that line. But in that very complex world, Katharina, I'm curious, do you think it's possible to devise proper accounting systems that capture this, that would have any kind of legal validity? Or because, you know, we have things like IFRS, we have all these legal accounting frameworks at the moment out there. Can we actually get any of this these green issues accounted for properly?
I think it's probably easiest on the green issue, assessing the kind of assets that have a certain externality that you can somehow quantify, and I think sort of what has been done in the insurance sector and elsewhere can be brought to bear here. But I think we are focusing almost too much, even though I recognize the really importance of environmental issues, but it's also about social issues, and it's also about governance, right? And we just had an interesting conversation about taxes. So is paying taxes part of the governance issue? Could also be quantified in a certain way, right, if we did that. The labor issue and the social issues are even more problematic. So I think part of the ESG agenda could be quantified. The real issue in the end, I think, is how we create the incentive structure so people behave in the interest of certain other groups of stakeholders, right? And let me just throw out a radical one. What if shareholders bore full liability for the externalities on certain environmental disasters? That would change the incentive structures of the company management and of their shareholders right away, and that would be priced in, I'm sure, right? So I'm just, I think we just should explore the entire spectrum of things that we can do to really alter our incentive structures.
I mean, the current environment, I think a lot of private sector companies would say, well, that's unfair because government is demanding that green finance picks up the baton of encouraging adaptation and change, and government's not doing it instead.
Well, I mean, you could also see it from the other side. Having limited liability is an enormous privilege that was bestowed on you by law. We can take that away.
I mean, I'm curious, I'd like to come to you, Hiro, because I'm curious about the degree to which you think that driving forward an ESG sustainability agenda, and for those of you who don't know, Hiro Mizuno has really been at the forefront in Japan of changing attitudes, really, quite a pioneering way, and actually saying we need to put these issues on the table when we use public money or pensioners' money and invest it. But I'm curious, when you look at this whole ESG landscape, do you assume that there's actually a financial sacrifice when you invest responsibly or not? And why do you think about that? I'm going to quickly do an audience poll, because we have something called Slido. I don't know if you all have your Slido devices with you. Do you all have your Slido devices with you? Or your phone, sorry, just your phone. And I've got two questions I'd like to ask you all, and then ask Mizuno-san to respond to. How much of a premium would you pay for ESG sufficient assets? Would you pay 10% per share, 5%, 40%, or 0%? I'm curious what you would pay. Technology may not yet be quite... I mean, three people have worked out how to use the system so far.
Yeah, exactly.
Mizuno, while they're thinking of their answers, and we'll say it in a moment, do you expect to have to pay a premium for ESG assets, or?
I think this is a wrong question to ask.
Okay. Judging by audience participation rate, I think people agree with you, but yes.
Right. Fine. So the other 54% of people are willing to pay 10% premium for the company who does have a good ESG qualification. That's interesting, because we have been working at the PRI, which I serve on the board, that the ESG is not the compromise of return. So basically saying it's a part of the other investment and financial decision making. But can I say something about the sustainability? Because I support the stakeholder capitalism, a multi-stakeholder model. At the same time, I have been questioning why the environmental issue has been discussed as a part of this stakeholder capitalism. Because is planet the stakeholder, right? And then I finally concluded in my own way that the stakeholder we have to pay attention to when we discuss take the environmental issue into our investment is future generation. If we take a future generation as a stakeholder, it totally changed the landscape. We need to pay attention to these environmental sustainability, right? So, and also social stability issues, which we are going to make the society more stable for the future generation to get into. So I think the stakeholder capitalism itself can take a lot of issues inside. So I always say like a sustainability in a way is the inclusiveness of the future, my future generations. So if you have that mindset, the stakeholder capitalism actually covers a lot of ground. So this one, the biggest debate which I had when I started trying to champion the ESG investment, I'm not talking about in Japan, but we try to do it globally, is whether it's, there's any trade-off between ESG consideration, ESG integration, and a financial return.
Yeah.
And we've been saying, if you really think more holistically, if the company who tend to have the negative environmental externality, or they cannot treat their society or customer well, or they don't have a proper corporate governance to make the more robust or resilient decision to lead the company, I don't think that's the sort of non-financial information you should take into account. So we've been advocating, if you have a long-term framework or long-term investment horizon, long-term viewpoints, all of these issues should become financially relevant. So to move the investor community, there's two approaches you can take. One is a risk angle, the other is opportunity angle, right? If the investor knows either there's a risk or opportunity, they move or they change their behavior. So, but the difference is, opportunity, people by definition has a different opinion. But the risk, we can create a consensus. So we try to create a consensus. ESG is a systemic and contingent risk for the asset owner. And if you, regard yourself owning the whole capital market, these ESG externalities, you ended up taking it. Right? And even for the small asset owner, I always tell them, your portfolio is not going to be segregated from what's happening in the world. Right? Recently, some asset manager or asset owner started saying, my portfolio is already Paris Agreement aligned. How could it be possible? His portfolio, her portfolio is Paris Agreement compliant, but the world is not. Right? So if the people have to have that kind of perception, everything becomes internal and financially relevant.
And yet, looking at the results here, this suggests actually the audience here thinks that there is still a small sacrifice to be paid for investing.
No, is that something
ESG.
they're willing to pay, or that's their perception?
That is, how much would
precise.
you pay?
Okay.
I understand.
Because I don't think any fiduciary investor can accept we are paying this premium, right? So maybe this is what the people think. ESG comes with a cost, and they have to accept it, which I disagree.
Right. Well, if you're right, then if there's going to be a gradual realization that that's not the case, that 53% is actually wrong, there could be even more capital flows in the company.
Well, you look at it, 78% say they pay some kind of premium, right?
Yeah.
Some kind of premium.
Some kind of premium.
And I'm assuming that they're saying they would buy a stock with a premium to it. So to me, it's like, why do companies get a premium to start with, right? They may be blessed to be in the right industry, but it's usually because they're well managed, right? The better managed companies get the premium. The poor managed companies in an industry segment get negative. And so to me, this is another definition of whether the company's well managed. Is it recognizing, all the issues it's got to deal with, including ESG? A definition of a great managed company would be that it's recognizing this particular issue,
Yes.
as well as all the other myriad things you got to deal with when you're running a company.
Well, let's look at another question. We have one more question for Slido now that you've all worked out how to use your devices, which is to do with how long will it take to actually get some kind of consistency in ESG standards or credibility, because of course one issue at the moment is that there's not. Okay, well that's not encouraging.
I'm gonna wait.
I notice that it's the negative answers that jump in quickly. So either the naysayers know how to use their devices better than everyone else, or they are more keen to have their voices heard. How long do you think it's going to take to get ESG standards in place?
This one?
Yes, if you had to vote.
It depends upon, I mean, if you really wanted to have like a perfect and also want to make it compulsory, it's going to be really difficult because a lot of ESG information, we track down the how different ESG rating company rate the same Japanese corporates, and the correlation has less than 0.1 R square, meaning almost at random. So it's very difficult. E is okay because it can be quantified. But the social becomes impossible because people are looking at different things. Yeah. Even the G, which people believe G has much more relevance, I mean, we don't see any conversion in those different two ratings. So I think maybe even in 10 years, if they really wanted to give a standardized and a compulsory standard, I think it's not going to happen. But my argument is, I don't understand why the people use the lack of standard as an excuse they cannot make an investment decision. Because I grew up in a private equity where we thrive on the lack of information or lack of standard data.
Right.
So I think the investors should take the advantage of and try to make their own judgment, and rather than using a lack of standard reason why they don't jump on it. Because I never heard anybody who just don't think the ESG is a relevant financial information, whether it's a risk or opportunities, why they have to wait for the standardization to come into play, which are probably not going to come.
Right. I'm curious, Brian, do you use things like SASB or TCFD? Are you thinking of doing that inside AIG?
Well, I don't think that there's, a hard and fast rules that we have in investing around ESG. But I think we are, we have, a large portfolio of, assets that are environmental, alternate energy and assets, things like that. But as a, I get back to this question of management and what you're doing and how well you're running your company. So if you're making a stock investment, that's one thing. If you're taking debt on, the question is the company going to be able to pay the debt over a period of time? And for us, we need long-dated assets because a lot of our liabilities are long-dated. So it's not just can you pay it tomorrow, but are you going to be around 10, 20 years from now? So I don't know whether these standards are going to emerge or not, frankly, but I think we make investment decisions every day, and you're still trying to pick the best investment that's going to give you the kind of return you need. And if they're well managed, you're going to get a better chance of getting that return. I get back to my management.
Katharina, I see you're pulling a face. And I'm going to turn to the audience for questions in just a moment.
Yeah.
So,
No, I think, I'm not sure we can just rely on the fact that whatever we do on ESG will bring us better returns and then still be able to deal with the environment. I think we just have to factor in that this will cost something. And the hope that we can basically just make sure that we get enough of investor returns when we have a well-run company. If that had been true, we wouldn't be where we are right now. It hasn't been true. I think we're responding to the environment only when actually the Amazon is burning and Australia is burning. Then all of a sudden everybody says we have to price this in. If this doesn't happen in the next couple of years, people will forget about it. I don't think we can just rely on the goodwill of people who are working in a very competitive system, in a very complex system, without giving some stronger guidance. And I admire your ability to do this for Japan, but I think also the fact that you are managing one of the largest or the largest asset owners sort of gives you a different perspective. And the smaller ones should have the same perspective. I realize that too. But I think they don't. They think they can make more money by disrupting, by doing something different, by being competitive, by trying to sort of find another way to make money. And that will sort of drive the system in a different direction again. So.
Well, there's a benefit to being big.
I disagree, but I like disagreeing, so...
Yeah. Right, well, perhaps we should turn to the audience for questions and see whether anyone else wants to disagree or agree. It would be courteous but not compulsory to identify yourself, and please keep the question or comment short, because I imagine there are probably several other comments that want to come in.
Thank you very much for inspiring discussion. My name is Taisuke Sasanuma. I'm running a private equity fund management company called Advantage Partners in Tokyo. I have one question from each panelist: how to enlighten or educate consumers to pay attention to ESG concept and share the incremental cost to realize this environmental or society-oriented compliant products rather than just pursuing the cheaper products. My portfolio companies always facing some trouble that they have to pay really expensive cost to realize the ESG. And so it's not to be sustainable. So consumers should understand that that is very costly, so they have to share those economic costs in order to really realize those things. But it's not easy. So how would those professionals, experts, think about how to educate people, consumers?
Yeah. No, I think it's a great question. And I think a lot of consumers are actually very well attuned to the fact that they have to be more environmentally conscious. And finally, in the US, we're getting something about plastic bags that happened in Europe decades ago, that you wouldn't just bring your own bag when you go shopping. Simple things like that, you can change their behavior. You can also change their behavior that they have to pay a higher price. Unfortunately, the ability to pay this higher prices, however, is reserved for the middle class and the upper middle class, right? That's where you get the kind of people who will be responsive to that. But we also have to realize that most of our consumers are labor, and labor income has been decreasing in real times for quite some time. And so asking them to pitch in will require probably a bit more than just education.
I mean, Hiro, in a country like Japan, where you already have zero or negative returns on many assets.
Are you talking about government bond?
Yes, yes.
Yeah.
I mean, do you think people are willing to accept that there might be a sacrifice for investing in ESG, or you just don't accept the thesis that there is any sacrifice?
I still don't think there's any sacrifice in investing in ESG. Actually, I think if they fail to do that, I think the negative, the cost we will end up incurring will be detrimental.
I agree with that.
And then, so the
But
challenge.
do you think consumers understand that message, or pensioners?
No, I think we don't need to educate the consumers. I mean, I shop everywhere, and I mean, I actually see some countries, consumers telling investor to accept it. Right? So it's not like that we can educate the consumer to change their behavior, but sometimes consumer teaches us, and in Europe it becomes more and more obvious. And but the problem is who actually decided to take the hit first. And maybe in some market, the investor have to take the hit, and the other market, the consumer may take a hit, but somebody have to start it. And it's very difficult for us to just make the plan and to educate. But I think that we don't need education. The consumer is actually becoming more and more vocal about what they eat and what they buy.
Right. A question over there.
Alena Fadjer, Global Shaper from Paris. Thank you so much for your inspiration. From your perspective, what needs to happen this year on the financial market to switch the majority? Because today we see some first movers already integrating sustainability and other SDG goals in their short-term and long-term investment decisions. However, there are only few. And what needs to happen to achieve the critical mass, then SDG strategy becoming new normal for the market? And how can you contribute to this action within your company? Thank you.
Shall I go first again? I'm happy to.
Yes.
Okay.
Big sweet question.
So if you want to do this year, we have to have, I think, a decision that is not made just by the investors themselves, but comes from the outside. That is politically probably also infeasible, but if we had to do this, I think it has to cost something. We have to bring these costs of not doing anything forward, right? Because the danger is that people don't realize what the costs are, and then we've debated the discount value for decades already of the environmental problems and haven't come up with the right number yet, and therefore haven't done anything. So we have to make it that you can feel it today, which brings me back to saying, well, if you might face real liability for the environmental externalities your company produces, maybe that will lead to a rethinking.
I mean, another way to look at it is that an insurance company already does face essentially the cost of misjudged
We
risks.
do,
And one of the ironies
it's
is
very frightening to hear that, the liabilities are going to be changing, as long as they're not changed retroactively.
Well, you can phase it in. We do a transition
But
thing.
prospectively, I think that's
Yes.
fine.
one
But
of
if
the
you change it
things-
retroactively, then you know, there's you know, you got to deal with us. I mean, and so the courts in the United States have done that with that legislation in the past.
But one of the things I find
Change of
fascinating is the
retroact.
insurance sector, to take climate, has been hyper aware of climate risk for a very long time, as you say. And, you know, the idea that Florida properties could be, you know, drowning in a few years is nothing new to insurance companies. You have fantastic models, very sophisticated models, and yet your average mortgage bank in the US, or let alone someone who's investing in muni bonds, this seems to be a shock. Do you feel any responsibility to share your models more widely with the public and try and alert them to what's coming down the tracks?
Well, you know, do we have a responsibility to share the models? I'm not sure about that, but you know, I will tell you that, you know, there are programs. The U.S. government covers flood, okay, but when you actually look at the penetration, the people who buy the flood insurance, it's small. People who buy hurricane coverage, even in places like Florida, relatively small. Earthquakes in California, even Japan, the penetration for earthquake coverage is low, right? So, you know, here's a consumer, you know, with an issue that is choosing not to insure, and you know, I think we all probably feel we'll be lucky and we'll be safe and it won't hit us. So, you know, there is the buyer side of this thing that also has to be recognized. How do you get people? So who's going to superimpose, you know, kind of standards around that to get them to buy? You know, insurance for automobile coverage is mandated by the states. You have to have insurance for automobile. So. Would you do that? That's maybe something that the government could enable. They provide the program, but they don't make people buy it.
Sorry,
And by the way, I'm not sure that I want that done.
of course
I mean,
you don't. That would
because
affect your business.
no, I mean, I think there is, you know, we all, you know, we love our personal freedoms to make choices, whether you do or you don't. But I'm just saying there is stuff, there are coverages available people don't take advantage
Yeah, just a
of.
knowledge gap between, you know, what the insurance company can see, what other parts of the financial system today can see, what the end consumers and investors can see is so big. It's striking.
Well, I mean, you live on the coast of Florida. You know that the wind blows. Still don't buy the coverage.
Well,
I don't know.
people who are investing
Take a horse to
in
water.
people investing in muni bond markets today may not have noticed that necessarily. But anyway, priced it in. But anyway, sorry, here.
No, I'm just trying to address her question. How to move the other investor community, how to move the capital market. One is we need to change the base case scenario. Because if they take, you know, the SDGs goal to be achieved or not to be achieved, the one base case for them to start their analysis, it will move the market. Or the market take IPCC report or like a Paris Agreement as a base case, it will move the market. But I keep asking all the other big asset owners and asset managers, do you think the current capital market has fully, priced in those risks? I've never met anybody who says, yes, it is. So that we are facing the situation, this market has to, the price those risks in, which we already know. And the second issue is, this is all about the financial education. Over the last 6 months, I talked to the financial professor or financial department, all the major business schools, and I keep asking, how can we hedge or how can we manage these kind of non-traditional financial risk or systemic risk? We studied a lot doing a CFA or studying at the MBA, how to manage daily volatility and the difference in the capital, different markets, the movements, but we never been told how to manage these kind of systemic risks which affect the whole portfolio. And it's going to come someday, but we don't know when. So those risks, we have zero tools, financial tools. That's why we have to think a little bit out of box. Otherwise, we'll continue to wait until, because I've been criticized, ESG has not been proven. And when it's proven, it's maybe too late.
Right.
Yeah.
Well, that's a great way of putting it. I mean, I must say, I started this session by pointing out that the Business Roundtable had caused great surprise by coming out with their statement, but that, frankly, I was still baffled by what the statement actually meant. Mm-hmm. I must say, you've rather reinforced me in that view, because as we've heard, there's a lot of discussion about long-term investing and stakeholder capitalism. And yet what it actually means in tangible, practical measures is still very much under debate. And I do think that 2020 is going to be a fascinating year to see whether any of these bold pledges actually turn into tangible action, and also to see whether we see the environmental threats and the inequality threats and all the things we've talked about actually forcing companies and investors to change. So that's a very long-winded way of saying watch this space. At the Financial Times, I think we'll have lots to write about. Please keep telling us all your stories in this area. And thank you very much indeed for a very thought-provoking discussion. Thank you.
Thank you.